All right, once again, it's going to be the recap for my trades today. Very last day of the week, first day of the month, September 1st, 2023, and also coming right before the holiday. Remember, this weekend is going to be Labor Day. Markets will be closed on Monday, so we'll be back on Tuesday to trade. But nonetheless, it never ceases to amaze me how you can really come in with a strong bias. And I certainly came in with a strong bias today, thinking today was not going to be a very good day. It was going to be quiet, and it kind of started off that way, and I figured, sure enough, here we go. But things turned around very quickly and turned out to be a very, very good Friday. So that's the thing about trading is, we all tend to have a bias which way we think the market's going to go, best times to trade, all that good stuff. And, there's some truth to that. In the morning, you tend to have your bigger runners, which is, and I try to catch the bigger runners. And in the afternoon, when you're trading stocks, typically you're not going to see those big runners. Doesn't mean it won't happen. It can happen. It will happen. But most of the time, your targets have to be smaller if you're going to be trading in the afternoon. But overall, you never really know. And Fridays, a lot of people don't even like to trade on Fridays. I know traders don't even touch the market on Fridays, but when I went back and I looked at all my results and I just took out the Fridays, found out that I was profitable on Fridays. So there was really no reason for me not to trade. And that's the thing. If you think that Fridays are not profitable, then, back that up with some hard evidence. Look at all of your trades on a Friday and see if that's the case. And look at all your trades on a Monday. Are Mondays your better days? Who knows? It's just... So before you just make an assumption that Fridays are going to be dead, that doesn't mean you don't look for opportunities. And because a lot of times you'd be surprised, and today was one of those days. So let's start in with the mini Russell. As you know, I came in last night. I was short on the mini Russell. Let's see here. Let me go. Let's go time a little bit here. Just scroll. Okay, here we go. So this was yesterday. This came in. Nope. Wrong direction. Here we go. All right. So this short came in. Let's get this better. Thought I had my charts all set up, but I did not. That's okay. We'll get this thing all figured out here. All right. Coming up on it. It was like very end of, kind of towards the end of the day when I had this short. Okay, here we go. So this was yesterday, the 31st. I had a pairing pattern short. And it was just kind of just hung in there all day. I really thought this was going to be a good trade. I know markets were up on Thursday, but I figured, going into the weekend that we would have a sell-off, right? So, end of the month, right before a holiday, I figured we'd see some profit taken and have a nice little push to the downside. But, and that never happened. And I carried this over, as you know, I carried this overnight. And you'll see eventually my target got close to my target yesterday, but never really, never hit the target. And this was my first target. So I typically am not going to get out early unless there's something I see in here that I do not like, right? So, guys, it's okay to override your stops. I don't like to override my stops if it's going further and further against me. But if I decide I want to get out early, that's okay, because I'm looking at the overall conditions of the market, and there's no reason to say that things can't change. Now, though my probabilities are still there that this, over a long period of time, I'm going to hit these levels, sometimes, you still have about a 30% chance that that's not going to be the case. And being a discretionary trader is something I think we all want to become better and better at, and you never stop. And you cannot make trading mechanical. A lot of people want to make everything mechanical. They want to buy at a certain place, and they want to put their stop in for a certain dollar amount. And of all the traders that I know that have tried that, and me being one of those, when I first started trading, it's definitely not a profitable approach. I don't care what anybody tells you. I've never seen the evidence to show that a 100% mechanical system or approach to trading will make any money. All right. So we're talking about long term. Everybody can get lucky for a few couple years, but when you're looking at 5-10 years, if you want to make a career out of this, that's a different story. So anyway, that being the case, you have to really watch the market action, and the more time you spend in front of the charts, the better trader you're going to be. And if you don't have time to spend time in front of the charts, then what I would do, and I used to do this even though I was a full-time trader back when I started trading as a broker back in the early 80s, is I would still make a copy of the charts. And back then, all I could do is make a copy. I didn't have a whole lot of historical data. So I would print out the charts, and every night I'd go through those charts. And I built up thousands and thousands of 5-minute charts and 30-minute charts. I just flipped through them every night, just looking at them. Just with the idea that I'm going to eventually see something that I've never seen before. And that did turn out to be the case. So you remember, your subconscious picks up a lot of things and patterns that you may not consciously be aware of. And so the idea is that if I kept looking at the charts, things would start to pop out. And they did. And that's how I found a lot of these patterns. But it took years of just going over the charts over and over and over and over again. Different markets, different time frames, and just study them every single night. But, the more effort you put into this business, the more successful you're going to be. Just because somebody gives you a medical bag doesn't mean you're going to go out and be a doctor, right? You got to spend a lot of years learning how to be a doctor. There's a lot to it. So don't think anybody's going to give you some mechanical system or some trading tools. All of a sudden, you're going to be a successful trader next week. That's what a lot of the false advertising wants you to believe, because they want to sell you their products. But in reality, and I'm here to tell you, that will never happen. No matter how good your tools are, I feel my tools are the best, but still, even with the best tools in the world, doesn't mean all of a sudden you're going to go out and start making money. So, but I want to be really honest with you, and because a lot of traders come in here and they look at all this false advertising and they look at all these fantastic results, but the problem with that is if you look at those results, what are they posted a year ago, maybe they post one, maybe every couple weeks, maybe every month. The key to success, if you want to track somebody, stick with them for a good while and make sure they do, and they trade it on a day-by-day basis. Watch them trade daily to see if the tools that they have is something that's going to work for you. And that's really the whole idea behind my videos. I'm not here to convince anybody, okay, that I have the best tools in the world. They work for me. And I'm here to show there is a different way of trading that is different from what everybody else is doing. My tools are unique, and so there's a lot of different ways of doing it. All right, but the best way to evaluate whether you want to trade is to follow somebody live in the market, not to see their P&L. The P&L means absolutely nothing. First of all, it can be doctored, number one. And number two is a lot of these guys are trading with, $500,000, $1 million, dollar accounts. And so when you look at these fantastic returns, it's really a small percentage. So and then they only post every once in a while. So that's the key. So, if you're thinking about following somebody and investing your time and effort learning something, then at least be able to track it for a while, real time, and before you put your money behind it. And that's the whole idea. Trust me, I've lost thousands of dollars chasing the Holy Grail, and what I finally realized is it doesn't work. And I've known other people that have spent hundreds of thousands of dollars literally looking for something, the Holy Grail, and it just doesn't exist. Are there tools out there that are better than others? Yeah. And I know there's a lot of tools out there that are really good that you're never going to find available in the open market. All right. So that's the other thing. Very few people are willing to to teach you what they know because they just don't want it. They don't want it to get oversaturated. So those are the things you need to be thinking about. But nonetheless, let's get here. Let's take a look. So had a short on the mini Russell, and I really thought it was going to come down. Once again, came in with kind of a bias, but once again, I'm not going to let that stop me from not looking at trading on a Friday. And it was a pairing pattern short. I did carry it overnight. It actually turned out to be a losing trade. And, you know, when I looked at it this morning when I first got up, it looked like, yeah, it's just kind of going sideways. This thing is probably going to come down. I'm probably going to be okay. Then everything started heating up, which was really a surprise for me as we get in here. So now we're moving into Friday, and we're still moving in Friday, so I'm still short from Thursday. And I actually got stopped in our reverse. Now, this was an actual stop and reversal point. This was something that was planned ahead of time. And this was actually one of the patterns. So what I had is I went ahead and I reversed, and we ended up having what we call an HF1 buy. Remember, I have 4 different patterns. HF1's one of my favorites. So I went ahead and I reversed on this trade, being an HF1, and actually ended up doing pretty well on it. Actually getting out here right after the opening. So once again, you had that big spike. We've talked about this a lot. Is particularly I see this a lot in stocks, not so much in the indices, but I love to get in a pattern, seeing a pattern develop right for the opening bell, and then all of a sudden you just get the public jumping in there and it just shoots it, and then you get out of it. So pretty much what I did is once the mini Russell opened up, quickly hit my target, and then I went ahead and I just exited. Wasn't going to try to be a hero. Again, when I'm trading the indices, I'm always going for my first target. Unlike stocks, which a lot of times I'll ride those stocks, trying to go for more targets. Indices pretty much sticking to a single target. But that doesn't mean I won't change my rules. But I'd say at least 95% of the time I'm getting out at target number 1. Unless I see something in there that just says hold it, and I'm going to hold it a little bit longer and see if I can catch more of the move. But once again, it depends on a lot of different factors. What are the other indices doing? What's the Dow doing? What are the markets doing? What are stocks doing? Once again, you've got to look at things more in a holistic approach. Just get so focused on one commodity, one instrument, but everything is kind of interrelated. So let's see what everything else is doing, whether it makes sense to hold it a little bit further. So let's take a look at the stock. Let's take a look at our stock, see what we did today. All right, so first trade was EOSE, pairing pattern buy. I probably wasn't in this trade maybe 5-10 minutes, went ahead and got out. And the reason for it is it didn't hit a mental stop, all right? It was the action that got me out of it. What I didn't like is a couple things. Number one is that, I like the pattern being set up. I was a little concerned about the volume. There wasn't a whole lot of volume there. Spread wasn't too bad on the bid and the ask. But I didn't see a whole lot of buying coming in. And that started to concern me. And then when I saw this push down, this double candle big reds, I went ahead and got out. I just went ahead and exited. And the market hadn't even opened. It wasn't even 9:30 yet. So, and that turned out to be a pretty good decision. Now, you could have been tempted to get back into it thinking, okay, it was just to pull back and just get ready to go at the opening, which I think may have faked a lot of people out. And sure, as soon as it opened up, just at even a heavier flush, it turned out to be a really nice decision on that trade. So once again, just kind of understanding market flow, looking at book map or level 2, whatever you have, watching the volume, seeing the strength in the other markets. Just a lot of things said that I really didn't like this. And then, of course, in the back of my mind, I'm thinking it's probably going to be a slow day anyway. I probably don't want this. It didn't show a lot of strength coming into it. And, it could even bounce back a little bit after this pullback here from these highs. So anyway, I got out of that. Did okay. Took a loss on it. But I did catch some other really nice ones. Let's look at those. All right, so the second trade I made this morning was on WEBL. That came in Came in fairly early here, about a quarter till 8. I really like WBL. Now the other thing is WBL has been showing up quite a bit on my watch list, and that's the other thing is I like to see, because a lot of times you'll see these stocks that pop up on your watch list. In other words, they have a lot of interest coming into it. Volume's good, buying's been good. You'll see those same stocks pop up for quite a while, kind of like my JDST. I've been in JDST now. I've been trading that for over a month now. And in fact, I made a trade today on JDST. So, when you have markets, when you have a market like this keeps popping up on your watch list, whatever that watch list may be. I have my own way of looking at a watch list, but I'll start making note of those that keep popping up, and then I'll watch them every morning just to see if they're starting to heat up again. Because they cool off for a while and then they heat up again. So I like to have a go-to, things like WEBL, JDST, DUST. There's many others that I like to kind of watch and see if they're starting to heat up. Yang, YANG. I think YANG is probably going to have a nice day here coming into this new week. So, but I've started trading it because it's pulled back. And if it starts to heat up again, I want to get back into YANG. So that's it. Try to build up not only your daily watch list, right? Things that are starting to heat up, but also things that have heated up in the past. Just keep them on the radar. Look at them in the morning and see if it's something you want to add to your morning watch list. Because a lot of times you'll see that those particular stocks just keep popping up, and they're great little stocks to trade that, pull a little bit out of it here and there, and that's kind of what I like doing. So anyway, WBL is definitely a buy this morning. Showed a lot of straight, not a whole lot of pullback. Still seeing really good buying. Scanner was just telling me he was making new highs all morning. I went ahead and added right before the opening bell, and then right after the opening bell, hit my target. That was the spike, and I went ahead and got out. Wasn't looking for more on WBL. Once again, I'm trying to just go for that first target, particularly in the back of my mind, thinking maybe it's going to be a slow day. I went for that very first target, and I didn't even watch the rest of it. It looks like it eventually came back, tried to come back up again, and it kind of died for the rest of the day. It looks like, kind of died. But you know what? WBL is probably going to be another trade next week, so I wouldn't be surprised if I didn't jump back into WBL. Okay, so let's look at the really big one today. And this one should be no surprise to anybody. All right, ADTX, right? This is my big one yesterday and was my big one again today. So here's another example of, you get that stock that just goes crazy, on one day, keep following it. Now, a lot of times what happens on these stocks that have these huge days up, they just go parabolic. They usually pull back for a couple of days, and then they take that one more little opportunity to try to go back up. So you have those people that are looking for bargains, so they come in and they start buying it to try to push it back up. And usually you're going to get some sort of bounce, all right? Now, I don't necessarily get into it and say, I'm going to go for that prior high, but you certainly get some sort of bounce on these, all right? So ADTX was on my radar. It'll be on my radar again next week, all right, along with JDST and YANG and others. But yeah, so basically I had a pairing pattern buy, all right? And when you looked at the activity, there was a lot of activity going on. This thing was bouncing all over the place. Good sign. Now, high volatility, so you got to be careful. This is a $27 stock, right? $25, $26 stock. So you're not going to go too crazy on it. But what you want to do is that if it starts moving in your favor, you can always consider adding in. Have that finger on the trigger to go ahead and get out of it, all right? So it was a pairing pattern buy. I held on to it. It was pulling back, but the volume was pulling back. So when I saw this coming down like this, volume was pulling back. It was getting quiet. So I felt that we had we're going to push this baby again. It was bouncing all over the place. Started firming up again. I actually ended up getting an HF2 buy right here. So I went ahead and I added to my trade. That was my first target on this. Of course, as we were moving higher, My longer time frames were providing me with more targets. But that was the target that I was looking to get out of. I didn't want to get greedy. It did come through, and I went ahead and I exited my long position. All right. But how far did it go? It went all the way up to 54. All right. But that's okay, guys. All right. Don't be going for these kind of moves. I mean, some people that have deep pockets, they can do that. But I'll tell you what, how would you like to buy it at 54 and then have it flush down? And then it goes into a halt, and all of a sudden you're down $20. All right. So these higher price stocks are not good stocks to start off trading unless you have a lot of experience. Stick with the stocks, between $1 and $10 is my recommendation. And then as you get better, when you see opportunities on these higher price stocks, then, they're going to give you some really good opportunities. But at the same time, be willing to go through the gyration. Things can go up and down $1 in no time. All right. So don't overextend yourself in these kind of trades. But, so what did that do for me today? Let's take a look. All right. Look at that. ADTX. One of my big winner for the day. CEOSC. That was my first trade. I lost a little bit on that. Made some nice money on WBL. GCT. That was one that was coming in towards the end of the day. All right. And so, GTC, JDST I put on fairly early, and I gave a little bit up on that. That's fine. I didn't really want to carry JDST over to the weekend. But all the rest of these were pretty much just little scalping trades. I was really surprised with GCT, the kind of move that it made. But, once again, it was one of those things to where it's just like there wasn't anything getting in its way. So GCT was a really good trade, but all these others I pretty much had my resting orders in to go ahead and get out. And once it hit my targets, I got out. Some I got out early, like JDST. Didn't actually hit my target, so I just went ahead and pulled the plug on that. What was the other one? GTEC, once again, didn't hit my target. EYPT did hit my target. There was one more, BTGN also hit my target, but everything else, I'm just, the two biggest trades were, ADTX and, GCT. Goes to show you, sometimes Fridays can really surprise you, and with this holiday coming up, I was really surprised. Usually the markets are dead, everybody's taking off early, nobody wants to trade, so I was really surprised to see what we saw, but hey, once again, that's why people that try to make predictions lose money, because you got to go with the flow of the market, all right? And even though Fridays typically are kind of quiet, doesn't mean you can't make money on a Friday, and it doesn't mean that you can't be surprised like I was. So, every day is different, every day is unique. You never know when there's going to be a lot of interest. Those opportunities can happen at any time. So I always say you want to be there on a day-by-day basis, because I promise you, and I say this a lot to my students, is that when you're trading, make sure you're there. Try to be there at the same time every day. Because that one day that you are not there, for whatever reason, it's going to be the day where you miss some really, really big moves. All right. It's just kind of Murphy's Law and the way it works in the markets. So, I'm here every single day. I trade in the evening. I trade Sunday nights. This is a life for me. So, if you want to make this a lifestyle, you got to put in the hard effort, to do it. And screen time. Watch these markets as much as you can. I know a lot of people have to work. At least come home. Take some pictures of your charts. Print them out. Put them in a book if you need to do that. Through a ring binder. That's what I did. And then every night, before I went to bed, I'd just sit and I would just go through all those charts. Just looking at them. Not forcing myself to see something, just kind of looking at them every night. I would just keep looking at the same charts, and all of a sudden you start noticing something. They say, wow, I wonder if that's something that's going to carry through. And then, You go through more charts and you say, wow, man, that's a pretty good pattern. Then you go through more charts, man, that's it. And then you say, man, that really looks good. You know, I wonder if it works on all these other markets. And then you start looking at other markets and say, wow, this is good. That's how you're going to find some really good, reliable, what I call universal patterns, is you're looking for those opportunities. You're looking for those price patterns. You're looking for whatever kind of pattern it is. It could be a pattern with volume and price. It could be all kinds of patterns. It could be correlations. But when you see it working across the board, you find something that works across the board, whether you're trading, if you're a commodity trader, or all you do is maybe you just like to trade the indices, or maybe you like to trade crypto, or maybe you're a Forex guy, or maybe, a lot of people like to trade stocks. You can find something that shows up in all markets and it's effective in all markets. Those are the kind of things that you want to start looking for. And that's what you want to trade, because it's not going to get any better than that, all right? And it's never going to be 100%, but you're going to want something that's going to be reliable. You feel comfortable trading and not stop trading. So many people start off trading some sort of new approach, and then all of a sudden they have a few losses and they throw in the towel. And that is so typical. But that's why it's important that you not only find something that is reliable and it's, quote, universal, but go back and be able to it gives you something to go back and test it historically. Patterns are a great thing because they're easy to test historically. So test it, see for yourself that it works. You need to be convinced of your tools. You need to be able to rely on your tools, right? It's just like the guy that jumps out of an airplane. He has to feel very comfortable with either his ability to pack his chute or the jump master to pack his chute, because if you don't, it's a life and death situation. So you've got to rely and feel comfortable with your equipment. It's the same thing with trading. You've got to feel comfortable with what you're doing, and you don't give up on those tools just because you have one or two losses, all right? So that's a little bit of my advice. I want to start sharing more as I start doing these videos, but I've learned a lot in my last over now 40 years of trading, and every little thing helps. And this is a business that you'll never stop learning. You can always improve, and most of the time it's just improving on yourself, okay? Being able to not overread something, all right? Not look too much into stuff, and controlling your emotions. So, all right, that's it. Everybody have a great weekend. Once again, be safe. This is going to be a nice 3-day weekend. We'll be back on Tuesday, and we'll do this all over again. All right, any questions, go to my website, innovativetradingstrategies.com. Check out all my videos on YouTube, and we'll see you next week.